So in my last video, I talked about the spruce budworm spray program currently underway in Maine, and I criticized the public funding of that program, likening it essentially to a bailout. I want to talk more in depth about that and elaborate on my criticisms of forestry subsidies in general, because it's an increasing point of contention I have with the field. And this is probably going to anger a lot of people, but it has to be said. But if you're willing to listen to my points here, there are some pretty substantial implications. And it's something that everyone in the forestry community should be aware of. So before I begin, I do want to be clear about what exactly I'm considering a subsidy. And for right now, I'm going to limit the definition to direct payments that support the cash flow of a forest investment. So these could be direct payments to landowners, or they could be grants or subsidies to markets that ultimately support the forest economy. One notable exception to this definition is going to be subsidized property tax programs. I think tax structures are pretty complex and nuanced. They're always incentivizing and disincentivizing different things, and every state has a different program. Some don't have any. So some programs may be real subsidies and others not so much. So I'd probably have to do an entire video just to deal with that topic, so I'm just going to exclude it for now. So it's common knowledge that forestry is a beleaguered industry. It's always bad news everywhere. There's no markets for anything, new bugs all the time. It just ain't what it used to be. And that is absolutely ridiculous, dare I say a bit whiny. Forest landowners are thriving right now, but the financial thesis around forest ownership has changed. And to explain why, we have to talk about the forest balance sheet. So a balance sheet, if you aren't aware, shows your equity, your assets minus your liabilities. So if you're a homeowner, your home equity would be your home value, your asset, minus your mortgage, your liability, and that's your home equity. For forest landowners, the balance sheet looks something like this. So the assets are conceptually broken down into two sections. We have the timber value, that's the value of your standing trees, and then we have the bare land value. So that's the value of your land stripped of the timber. On the liability side, typically there is no debt. Now people do borrow to buy forest land, but those notes are usually paid off quickly with timber harvests. And if they do that, of course, that is a risk that they chose to take on. But it's really not the base case. So equity levels in forest ownership are typically very high. The only real liability we have is property taxes, or taxes accrued if you want to be technical. And that's usually at a very reduced rate, sometimes just a few dollars per acre. So there's something really amazing about how this balance sheet is structured. The bare land value is inflation sensitive. It rises with inflation. The timber value is inflation sensitive. It rises with inflation. And typically both rise faster than inflation. With timber, it's a bit more dependent on the product, but both have a tendency to rise faster than the rate of inflation, and certainly that's been the case over the last 5 years. Now, any real estate asset can do this, but forest land is unique. They require little to no maintenance and thus little to no cash flow. Houses need roof repairs, they need to be heated in the winter, they need driveways that need to be repaved. They have to remain productive through occupancy in order to maintain their value. They have to. Agricultural land is kind of the same way. They can sit fallow for a time, of course, but eventually, if they sit unproductive, they turn into this. My land is actually an old farm that was abandoned during the Great Depression. Forests just are. They grow. They don't require any real maintenance. And the costs they do incur are typically variable costs associated with higher cash flow. So harvesting costs, road maintenance costs, etc. I'd even go so far as to put pest management activities like spruce budworm spraying in that category, because ultimately what you're doing is maintaining your annual allowable harvest rates to maintain cash flow. Cash flow requires cash flow. Now, these activities are what constitute forest management, and that is why we call it management, because you have a lot of control over it. It can be cheap, it can be expensive, it can be low cash flow, it can be high cash flow. You can structure it in an infinite number of ways, but it's not strictly necessary. So what do people mean when they say that forestry is a distressed sector? Well, they're talking about a very specific model of forestry. The timber value hasn't grown as fast as the real estate value, and so the returns on growing timber have shrunk. The income of the asset, the dividend yield, so to speak, has shrunk. Now, does that mean that the overall returns of timberland have diminished? No, not at all. Timberland has benefited massively from federal fiscal incontinence over the last 5 years. And so during that time period, the appreciation returns of forest land have averaged about 10% nationally. And the income returns have hovered right around 2.5 to 3.5%, nowhere near a negative number. And again, that's calculated kind of like a dividend yield. So the income is still growing nominally, but it's not growing as quickly as the overall value of the asset. And so the yield is shrinking. It hasn't been just an anomaly over the last 5 years either. This has been happening since approximately 2001, when China joined the World Trade Organization, which was a pivotal point in the financialization of the American economy. In light of that, what do you want? What more do you possibly want from this asset? What about this needs to be subsidized? What needs help from taxpayers? Everything about the forest balance sheet is beautiful. It is a 99th percentile balance sheet. It's like owning gold, but there's actually a productive dividend. And I know you might say, well, no, because you have to pay taxes on it. And you have to pay to store gold. I actually used to work for a Swiss firm that offered gold storage in vaults in the Alps. And there was a certain percent of the overall asset that had to be paid as a fee every year. The alternative was to buy gold from an ETF, in which case you have counterparty risk. So there's no such thing as a perfect asset. So why do people complain? Well, because in the 80s and 90s, it was a lot easier. You could buy land for a can of beans an acre and get a pretty good income return from it. Back then, in some cases, timber could be worth more than 100% of the bare land value, so it was basically free real estate. But guess what? Everything used to be easier. McDonald's used to have a dollar menu, and you used to be able to fly without being molested. 20 years ago, forestry was in a secular decline in an era of economic prosperity, and they kind of got used to being the only child uniquely deserving of attention and sympathy, and that is just no longer the case. Forest landowners are better off than most, and instead of being the victims of financialization as they were in the early 2000s, they're now the beneficiaries. It's just not a cash flow benefit, it's an equity benefit, and that might be a problem if forestry needed cash flow. But it's unique in the sense that it really doesn't need cash flow. That's a business management problem, not a problem inherent to forestry. Now, on the small ownership scale of things, I think the problem is really that equity isn't dopaminergic. You don't get a huge rush from having a lump sum of money fall into your bank account, and you don't have an index or Zillow's estimate to refresh on your phone every day. So it doesn't feel like it's there, but it is, and you need to recognize that and adapt to the new reality. Here's the thing. You might hear economists throw out the term K-shaped economy, and it is a reference to this bifurcation we've seen in our economics, where there's one group of people doing very well, going up, and another group of people doing poorly. They're essentially in an economic depression. And this is a direct result of deficit spending and its subsequent inflation, which has massively benefited forest landowners. Landowners are doing fine, and they're broadly in that top part of the K economy. And I want to be very clear about something. Maybe you yourself only own 10 acres and you're struggling deeply, and I get that. What I'm saying is that over the last 5 years, those 10 acres have been a real blessing to you, and they have helped at least preserve some of your economic position. And keep in mind, the budworm spray program that kind of initiated this conversation is primarily benefiting landowners who own hundreds of thousands of acres. So there's quite a range here, as there would be with any asset. In the forestry community, institutionally, there's a sort of consensus that it's always good to support cash flows with subsidies or subsidized markets. And this is based on a myopic view of forest economics that's frankly stuck in the 1980s. But my question is just this. At what point is it too much? At what point does it become zero-sum rent-seeking? Even if it doesn't initially look like it, forestry is structurally already a primary beneficiary of federal deficits and money printing. If through lobbyists, political connections, NGOs, or other mechanisms, we deliberately seek out additional spending on the backs of taxpayers to support this asset, spending that's already causing real and identifiable pain to everyday people in the form of inflation or higher interest rates, or both, That is indefensible, and it's time to stop. I do understand that as far as deficits go, there are larger fish to fry. The overall problem is in the trillions, and the problem in forestry is to the tune of millions or single-digit billions. But the small things matter, and this is my domain. It's the one place where I have a modicum of a voice. So if I don't speak up here, I don't really have a right to complain about it anywhere. And this is something I feel very strongly about. Our national bailout culture, which I'll define as our pathological avoidance of any and all losses, and increasingly our avoidance of any and all sub-double-digit returns, is bleeding us dry. It's leading us straight to hell very quickly. It started as an emergency measure, but it's gotten to the point where every time the stock market dips 5%, people start quoting Revelations and begging Jerome Powell to cut rates. It does feel to me like people are actively trying to game or gas the system for their own benefit in a zero-sum fashion. We are living in very greedy times. Now, I do think that the people who are involved in forestry on an institutional level are good faith actors. They're trying to do the best thing, and if I didn't believe that, I'd have much harsher words. But I've been doing what I do for a while now, and I've been experimenting with different things. So, it started out as an SEO blog, and of course now I have silvicultural and everything. So I have a lot of data and a lot of website traffic to work from, and I can even get some general statistics on the types of queries people ask the AI chatbot on silvicultural. And so I have a pretty good read on landowner sentiment, albeit with some selection bias. There are way more people interested in what their trees are worth now than there are interested in how they can make their trees worth more in the future. And that's the difference between cashing out on past production and improving future production. And you can argue that's to be expected, but to me, that's a direct reflection of the ways in which ownership of capital has been rewarded over actual production since the financialization of the American economy in 2001 or 1980 or even 1971, depending on your benchmark. So we can't separate the sector from the broader macro financial environment around it. And if we're being perfectly honest with ourselves, there is a latent greed in there. And maybe it's an unavoidable sign of the times, but to me, it starts to become an issue when we start engaging in zero-sum activities and when broadly we start participating in markets that are fundamentally based on nothing but lies. And of course, there I'm talking about carbon markets. And there are a lot of conversations to be had about this subject. The implications are massive. And when I originally was drafting this video, I started to go down some pretty abstract and obscure rabbit holes. And I decided to cut most of that out because I knew viewership would drop off pretty quickly. But it will be content for future videos, just less viewed videos. But one thing that I do want to be clear about, you can pick apart any individual argument that I made in this video, but the way I am describing the overall reality of the market is accurate. Yields have been dropping generally, and I have every indication that they will continue to do so. Even if we were to find ourselves in a real deflationary environment, which is a non-zero probability, I think in that situation, the income would just evaporate faster than equity. So we would ultimately still be in the exact same position. The modern thesis for forest investment is just no longer about income. It's about generational capital preservation. And if that's something that angers you or makes you mad, I would like to remind you that you do have the option of selling your land. And what happens usually when I suggest that to people or mention it is they get upset. And that's kind of funny to me because if somebody was complaining about a certain stock and then they were to receive the suggestion that they could just sell the stock, the typical reaction to that would just be to say, yeah, no, that's reasonable. But people will get upset if you mention that they can always sell their land. And I think the reason for that is that even if we can't articulate it ourselves, we know that there's some value from the land that we're getting beyond just the income. And that's my point. There is way more value in forest land than just the income. And so it should be anticipated that yields fall over time. right? It's kind of like the observation that fun jobs tend to not pay very well. Something like that. Anyway, like I said, more rabbit holes I want to go down there, but not for today. And usually this is the part of the video where I would do my marketing for silvicultural, but given that I was talking about greed, it seems inappropriate. So, toodles.